Welcome back. Over the weekend, the Fed funds futures have moved a little bit more towards a hike in interest rates, maybe sooner than expected. This is as of September 26th last week. The Fed funds futures predicted on the meeting coming up January 31st, 2024. That is the best chance, the highest chance the Federal Reserve will raise interest rates. That's a black line. There's a 37% chance that the Federal Reserve will raise interest rates on the January meeting. However, that was as of September 26th. September 29th, that shifted to the December meeting, a 33% chance. Notice how the lines changed. The best possibility that the Federal Reserve will raise interest rates is now the December meeting, a 33% chance. But as of this morning, there is a 45% chance that the Federal Reserve will now raise interest rates in the December meeting. It was, as of last week, 33%, now 45%. So we have seen a shift over the weekend, leaning more towards the Federal Reserve to be more hawkish, to raise interest rates sooner than later. Now, it's not a huge move, and there's still less than a 50% chance, but if the trend is your friend, the trend is moving towards the bias of raising interest rates. This is where we look like last week, September 29th. We had a 90% chance, the blue histogram bar, a 90% chance when the PCE, personal consumption expenditure, was released, that the Federal Reserve would keep rates unchanged at 525 to 550. There was only a 10% chance last week, last Friday, Federal Reserve would raise interest rates from 550 to 575. However, that was 90%. That's now 74%. As of October 2nd, there's now only a 74% chance, still better than anything else, that the Federal Reserve will keep rates unchanged at 525, 550. There's now a 26% chance the Federal Reserve will raise rates 550 to 575. So again, the expectation certainly for the next meeting is that the Federal Reserve will keep rates unchanged. However, the bias is a little bit more towards the hawkish side, a little bit more towards the aggressive side, where the Federal Reserve may raise rates sooner than expected. What does this mean? Well, equity markets seem to be very sensitive to the expectation of higher interest rates. And if history is any judge, well, maybe stock markets might not like this bias. And it's important to make note of this because with this week we have a lot of Fed speakers, and at the end of the week we have employment numbers, a very big event over the economic calendar. So we're going to keep an eye on these futures and the economic calendar overall and any significant changes along the way. We hope this has been helpful. We look forward to seeing you back soon.